is going on, everybody? Welcome into another edition of the Daily Energy News Beat Stand-Up here on this gorgeous Tuesday, October 10th, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Turley. My man, how we doing today?
It's a beautiful day in the neighborhood, Mr. Tanner. How are you today?
I'm doing good. It's finally starting to cool down here in Texas, which is nice. So I got to wake up this morning and put a hoodie on. I felt like I was in the Twilight Zone.
Yeah, me too. In fact, I've had my man cave barn door open all day today. It's been actually wonderful getting calls done.
Well, you're in Central Texas, so it takes a little bit for Central Texas to cool down, but you still have an
West.
excellent show lined up for us. First up, we're going to stick with Israel. Oil price, energy stocks surge after attack on Israel. Here's what comes next. And then next article to follow that up, investors look to oil prices, Israel-Hamas conflicts, risks, unnerving global markets. So as always, Stu will take a comprehensive look at what's going on in the Middle East and how that's affecting energy. Next up, this is out of the American Petroleum Institute study. Gulf of Mexico restrictions negatively impact U.S. oil and gas production, according to the oil and gas lobbyists. So I'm glad they're getting their job done. Next up, OPEC boost oil demand forecast to 2045. The ball that keeps on rolling, Stu. This is the fence post that never stops moving. It's in a constant outward shift, back, as Chris Berman would say, back, gone, a home run. So we'll cover everything that's going on with OPEC pushing back their oil demand, their peak oil forecast. And then Stu's going to really toss it over to me. I'll quickly cover what's going on in the oil and gas markets. Mainly, we saw prices up to about 86.30 as we cover this. That's up over 4%, really off the back of, again, some of the stuff going on in Middle East, and again, really showing the weakness in the supply and demand underlying. And then we'll kind of wrap it up with some musings from around the energy space. Still have not heard any word on Exxon's potential takeover of Pioneer, but we did see some interesting Exxon news drop. I'll lightly touch on that at the end. Looks like they blew it all on Pioneer, folks. I'll tell you that much.
Oh my goodness.
But before we do that, guys, again, as always, the news and analysis you are about to hear are brought to you by the world's greatest website, www.energynewsbeat.com, the best place for all of your energy news. Stu and the team do a great job of curating that website, making sure it stays up to speed with everything you need to know about the oil and gas business. Like we say, you're on the tip of the spear if you follow us. Check us out. Also, dashboard.energynewsbeat.com. It's our news data combo. Please give us feedback there. The best way to support the show is to go on YouTube right now and subscribe at Energy Newsbeat. Hit that subscribe button. Hit that like button. I won't give you my 15-year-old YouTuber impression. I'll spare that for another episode, but that's where that's the best way to keep supporting the show. You can also listen to us Apple Podcasts, Spotify, wherever you get your podcast. Hit the description below, links to the articles, timestamps. You can get in contact with the show that way, or email us questions at energynewsbeat.com. I'm going to Brett those, Stu. Where do you want to begin?
I'll tell you what, I want to give a shout out to Secretary Yellen, Treasury Secretary, because she listens to the show. You and I talked about just having down the crackdown on evasion of Russian oil price cap as effectiveness wanes. We were on that all along. And then there's an article that came out today. Oh, she didn't really say it, but she implied that she listens to us.
No, she's a frequent listener to the show, so we appreciate you, Secretary Yellen, for reaching out to the show. That sponsorship, the official United States Treasury sponsorship that we signed last week, we haven't gotten that check yet, so we'll be reaching out. Our AR department will be reaching out to you very quickly.
Oh yeah, and our middle name's not Ukraine or
it is Ukraine.
Israel.
That's why we're worried about where our money is. We figured in cash quicker.
Oh yeah. Okay, let's start off here, dude. Let's quit espousing. Oil prices and energy stocks surge after attack on Israel. Here's what comes next. This is a pretty nice little article kind of following up from yesterday. right out of the article. U.S. listed energy stocks were set for a positive open. Among them were ExxonMobil, up 3.9 in trading. Chevron was up 3. ConocoPhillips was gained 4.4. Occidental was up 4.2. And Michael, a lot of the investment houses around the U.S. were saying even Halliburton was up 6.1. Formerly Schlumberger.
We're
It's
keeping
not
that in
even.
the show. That's unbelievable. Schlumberger for all you folks listening. Whew.
I am such a dope. 4.3. That is Oklahoma State graduate, by the way.
Yes, I was going to say.
Okay. These events are really, here's where I want to just kind of give it a shout out to our show yesterday. Michael, yesterday on the show, we said that it was a 300% increase back on the first Israeli Yom Kippur war, $5 to $50. Right now, we don't see it going that way because it's a different market. Several different things are going on, unless because of the Secretary Yellen out there saying about the Russian crude going out. The Iranians' sanctions don't work either. If Israel goes out and takes out the Iranian oil wells, you will see a huge spike. And there's two reasons for this.
Yeah, I'll also be getting drafted if that happens. So let's hope that doesn't happen.
Oh, it doesn't. But on the here's why. There are two stories going out there as to why Iran allegedly, for our podcast listeners, I'm holding up the quotations, allegedly, is not funding Hamas by the $6 billion that the Biden administration put in. I heard great things that it was not great things that they did it, but the amount of oil that they've been selling to China, just like Russia, at that $80 mark above sanctions and outside of OPEC plus production quotas, has, they think, $70 billion has been the revenue stream. So $70 billion funded the attack on a good portion of it instead of the $6 billion. Loved all that analysis. Here's where I think it's going to really go on up. Does all that make sense, Michael?
No, it makes sense. I thought you find it interesting in the midst of an oil price shock. The stocks that are up more so are Marathon and Oxy and Conoco, which are more pure play E&P operators than you see Exxon and Chevron only up 3.9 and 3 percentage points. So you can see where the difference comes in. I think the article that you have next, investors look to oil prices, Israel/Hamas conflict, quote, unnerving global markets, points out that obviously oil prices are going to continue to rise. But I think what's going to exacerbate the commodities boom issue is the fact that interest rates are about to spike. I mean, we've seen the odds for interest rates here at home to increase have basically doubled since this, or not doubled. I think it's about have increased about 25% in the next Fed meeting after these results. So I personally, Stu, think that's going to be the biggest hit when it comes to Wall Street, is the fact that now interest rates are going to continue to stay high in this commodity style boom in order to help hopefully curb inflation.
I would agree. And this article is outstanding from Bloomberg. There are some very great quotes in there in that article. It is, the investors look to oil prices, Israel-Hamas.
Yeah. I want to do a quick shout out. The photo you have in there, rig I-35, that's actually a Zion oil and gas rig. That hits a little close to home. A good friend of mine at my day job, nice. He came over and was working at Zion before this, and man, he did not have a great look in his face today, and it sounds like a lot of those people had to get evacuated. There's a lot of stuff going on over there. So thoughts and prayers go out to everybody, specifically at Zion Oil and Gas. We know it's a tough day for you guys, but everybody over in Israel right now, especially the Americans, man, it's tough.
Hey, while you gave that shout out, I want to give a shout out to Elon Musk because on Twitter Spaces, I'll tell you what, that live features, I was listening to some of the worldwide news around there, and I just want to let you know some of my sources to hear them live and to hear them talk about this war situation, talk about nuts that we're sitting there listening to all this and people are jumping in and saying confirmed, not confirmed, here's a rumor, confirmed, this mosque was just taken down, boom, boom, boom. Talk about real-time news. Hats off to Elon for kicking this thing into high gear. All right.
Yeah, absolutely. What's next here?
API, American Petroleum Institute, Gulf of Mexico restrictions negatively impact U.S. oil and gas production, analysis shows. This is from their API. The analysis was submitted to the National Marine Fisheries Service, NMFS, and Energio Alliance. Quote unquote, energy production in the U.S. Gulf of Mexico is critical not only for meeting current and future energy demand, but also supporting conservation programs while driving state and local economies, helping the U.S. to meet our emissions and reduction goals. Said API Vice President of Upstream Policy, Holly Hopkins. She's class act. She is out there right on the front of it. So if you want to take a look at average oil and natural gas production is projected to decline under 2 million barrels a day, a 24% reduction between 2023 and 2040 because of regulatory and the issues that she's
just in the Gulf of Mexico, by the way.
And that's a gigantic chunk of what gets produced, dude.
No, I get what you mean. I think it's an interesting research paper. I always do find it funny. With the API is going to go out and write a research article trying to tell us that new regulations are going to impact oil and gas production. Well, duh. I'm glad all our hard-earned money's going into researching, in my opinion, an obvious fact that if you're going to restrict with oil wells declining, if you legislate through regulation, you're going to see declining oil wells. I do find it interesting, though, they do talk about specifically the jobs that are going to be cut. That's a drop of 13% of the jobs would be out. And that's specifically when you look at these regulations, that's something that I think moves the needle when you talk about
that's huge
to policymakers.
Exactly, because those that 13% of the jobs are high paying jobs out of the Gulf.
So I'm glad the API's on it. What's next?
OPEC boost oil demand in that demand forecast to 2045. Michael, it is absolutely a hoot to see what's going on out there. We've been consistent that you're always going to need fossil fuels, period. You like your iPhone? Need the plastic. You need the stuff out of there. Fossil fuel or renewable energy and nuclear energy can get you only so far. You're still going to need a certain amount. Now, OPEC raised its forecast for global oil demand through the middle of the century. And the EIA, which we know is a UN lapdog. This is from the OPEC secretary. There has been pushback against the opinion that the world should see the back of fossil fuels as policies and targets and other energies falter due to costs and more nuanced understanding of the scale of the energy challenges. He really doesn't address that in there, but Michael, it's because physics and fiscal sustainability matter. I applaud them for saying that.
Yeah, so there's a couple things here. First, there are 3 things guaranteed in this life: death, taxes, and Stuart Turley can't reading a title when it comes to Energy Newsbeat. The 4th thing that's coming in true here, though, is that we continually see this oil demand, peak oil demand, getting pushed back. It was originally in the mid-2020s. Now it's 2030. It was then 2035. Now it's 2045. How much you want to bet this time next year we're looking at 2050 when it comes to peak oil demand? Now, the interesting part is going back to the API. Of course, OPEC is going to say peak oil is farther out because they have an interest in saying that. But I do think that when talking about when peak oil will happen, you have to realize where do they represent this coming from? A lot of it is transportation, petrochemicals, and aviation. They say are going to be driving all the growth. They also say that India is expected to double its consumption from 6 million barrels a day all the way to 12 million barrels a day, followed with China only about a 26% gain with about 4 million a day. So China and India are where the majority of that expansion will come from.
And guess where they're buying their oil?
Russia
and Iran.
Yeah. Oh, fun.
So that goes back to my other articles.
Fun.
Just thought I'd share that. Most of the world's oil is going to go to pay for Hamas.
Yeah, we don't want that, do we?
That goes back to the Israelis. I'm not trying to hone in on you, but they're all these stories are related.
Yeah, no,
and we're not from Arkansas.
No, thank goodness. Thank goodness. We are from Oklahoma State, though. All right, you got anything else, Stu?
Oh, no. Our prayers go out to everybody over there. This is just a sad day.
Yeah, no, really sad day. Well, we'll kick it over to the finance segment here, guys. Not much going on in the global markets that don't really involve the fallout from Israel and the Israeli terrorist attacks. Stocks were actually up about 0.6 of a percentage point. NASDAQ traded up about 0.5 percentage point, mainly because we saw U.S. bonds fall by about 0.25 percentage point. That's the front 30-year yield. 10-year yield, Stu, was down 3.47%. So my money market account strategy has been taking a hit today. I was getting 5, 6, 7.5% in my money market account, and now days of that is all over. So thank you, Hamas. But I think really what you're going to see, Stu, is the fallout from this Iran-led terrorist attack is most likely again going to be in the commodities market. We saw natural gas did get up above $3.40 today, settled at $3.37. Oil prices started again yesterday, trading at about 82.79, opened all the way above $84, currently sitting 86.42. The macro drop behind this, Stu, really just has to focus that as we talk about, everyone's going to compare this, as we talked about yesterday, to the Yom Kippur War. Do I think we're going to see a huge fluctuation from $5 to $50 like jumps as we will? No, I don't think we'll see that. I do think, though, this could be the catalyst that will begin to have the fundamentals shift to the point where we could see $120 oil. $150 oil. Now, do I think that's possible? Do I think it's going to be sustained? No, but I do think we're in for a long sustained period of oil prices being above 85 and most likely above 90. Brent currently sitting at 88.62. Not much else happens, Stu. I'd be remiss if I didn't say that ExxonMobil had a little bit of a situation this morning. Their head of shale got arrested for some not so fun stuff. This is according to Bloomberg. ExxonMobil's corporate head of shale remained in a Texas jail Sunday after he was arrested for sexual assault at a hotel bar near Houston last week. His name's David Scott. He's a senior vice president of their upstream shale division. He was arrested at, get this, Stu, a La Quinta Inn and Suites. Blew it all on the Pioneer deal, I guess, man. Woo! Yeah, La Quinta Inn and Suites. That's where we have to get. That's where we book your hotels.
No, that's a lot bigger upgrade. I'm going to the International Midland Permian Basin show next week, and then I'm going to be there again to interview with all of the American Oil and Gas Association people the following week. So, no, I'd like to stay at the La Quinta.
Yeah, we got you at the Motel 6 right now. So just for all you people wanting to work at Exxon, Joe, when you get to that coveted senior vice president of Exxon upstream, you book yourself at La Quinta Inn, baby. That's what it all comes down for.
And don't go to the Christmas party.
Yeah, this guy ain't going to be going to any more Christmas parties. Trust me. This guy's gonna be on the bread line. This guy gonna be at the bread line.
You heard it
It's
here
not
from
funny,
Michael
but
Tanner.
this guy's probably he's made his last shale deal. I'll tell you that much. You got anything else for today, Stu?
Oh no, it's just there is so much going on the news desk, dude, and it's all related. Everything. It's energy. It's not just oil and gas.
Yep, absolutely. So with that, guys, we appreciate you checking us out here on this Tuesday. For Stuart Turley, I'm Michael Tanner. We'll be back in action tomorrow. See you, folks.